Good evening, Christopher. This is Ryan with TrendLizard.com. I hope you're having a wonderful evening. I hope you had a great weekend. Thanks for being a member at TrendLizard.com, and thanks for sending me the email with the 3 tickers that you wanted me to take a look at for you. They are Zoom Communications, Netflix, and Google, and we're going to take a look at all 3 for you. Starting with Zoom, we start, as always, just kind of with the overall outlook, just to give you the full perspective, and then drill in from there to try to make it a tradable setup for you as we go. So Zoom, incepted back in early 2019, had a 3-wave pullback, and then has embarked on a massive, huge, trendy move that is not yet complete to the upside. It looks to be in the 3rd wave of this 5-wave advance, with the pullback that happened over March and April as wave 2, and then in wave 3 still probably getting closer to a high for wave 3 and looking for a larger pullback in wave 4 once this up leg completes. So let's go ahead and zoom in. We're going to look at just at the action that's played out in 2020. This is a closer look. I just wanted to provide a little more detail of each trendy up leg that's been playing out to show you that it all counts out very well. Nice 5-wave moves, and again a 1, 2, 3, 4, 5-wave move to the upside off of that low in April. It does appear to be getting a little bit closer to the end of this 5-wave advance that played off of April's low, and so I think it's an increasing likelihood that we're going to get a larger pullback before too long. So again, let's go ahead and zoom in. Let's take a look at this strong up leg that's emerged just from August. That's this move here. You can see again it's taking a nice 5-wave form to the upside. It's been a huge move. It's more than doubled its value off of August low, so it is very oversold. Doesn't look like it's quite there yet. We know that the trend is up. We know that every up leg that's been playing out has taken on a 5-wave form, except for the one that's going on here in September. So it looks like it's given us a first, a second wave, a 3rd wave up, and then it pulled back last week, which I believe is the start of a 4th wave. So as long as it stays above 416, which we expect it to do, it's a pretty far ways away, although it's an amount that it gained just in the prior week. As long as it stays above 416, we're going to be looking for a 4th wave to complete, and then a 5th wave up from there. At that point, it's going to look like the up leg off of August low has completed, and then you start having what looks like a completed up move off of April's low, that 3rd wave advance. So we'd be looking for the larger 4th wave pullback, and a larger 4th wave pullback, depending on how high we get from here, would point Zoom all the way down to this area here, 375, basically 270 up to about 375. So depending on your time frame, Christopher, if you're a very short-term trader, you could still be bullish on Zoom and own it. If you're anything longer time frame than that, I think I would stay away from it, because it just looks like it's getting so close to a completion of that up leg off of April's low, and we're seeing that across the market right now. So I'd be more careful on this one until you get that larger pullback, because once it comes, it should be a correction of this entire up leg, which again should be fairly substantial down into this area here. So that Zoom, I would hold off. I would wait for a larger counter trend pullback, something probably that's going to last several weeks, find some support in this area. Once you start seeing trendy strength from there, that's when I would be interested in buying it. So, all right, let's move on to the next one, Netflix. Let's take a look here. This took me a long time, more than I care to admit, looking at this long-term chart. It's been such a beast over time, as you know, and it was really hard for me to label. I looked at this log scale right here, which is different than a linear scale. A log scale, every square is an equal percentage move instead of being an equal point move. So it looks a little bit different when you're looking at a log scale. What really cleared this up for me was going to a linear scale, and I'll show you here. This is a linear scale where every box is just a 25-point move. And it looks a lot more apparent to me when I went to this after looking at the linear scale for so long. Or excuse me, the log scale for so long. So bottom line, it was incepted back in 2002. Didn't do much in terms of at least on the linear scale here, but then it really started getting going in 2013, 14, and 15, gave us a 1st and 2nd wave up, and then a very massive 3rd wave advance, a very large 4th wave pullback that ended in late 2019, and since then it's been in a large 5th wave advance that's progressed pretty nicely over the course of this year. So this is what I see it as. If I zoom again or move back again to this log scale, it's not the most beautiful thing, but I think if we start at this point here in 2012, you can see the general 5-wave form that's more apparent on the linear scale. So let's go ahead and zoom in. Let's take a look here at just the advancing action off of the 2019 low. So if we take a step back out, it's just this advance that's coming in the fifth wave position here. And here's what we're looking at. To me, this is how I've labeled Netflix for a long time. It's one of the stocks that I follow at least weekly, if not more frequently than that. So I have a general idea of what it's doing. And this is the labeling that I've been using for quite a while. And it labels the first wave of the advance, the fifth wave advance, completing in late February. You get the nice second wave pullback in March when everything kind of crashed. And then we're still in this third wave advance. First wave up, second wave down, third wave up, and now a fourth wave pullback. This all fits great today. I'm not positive if it's going to continue to fit. In order for this to continue to fit and for us to believe that Netflix is going to continue higher right away, it basically needs to stay above last week's low of 460. If it moves below this low, you start having all kinds of problems. For one, you get overlap with this first wave high that happened back in May, but you also end up retracing so much of this third wave up, more than 61.8%, that you have to start thinking that something else is going on and that this labeling is incorrect. Let's go ahead and zoom in and look just at the pullback that's taken shape since July's high. This is it. So far, it looks like a nice counter trend move, but it has gone as far as it can go while still fitting as part of a larger third wave advance. So it basically needs to head higher from here. If it can move above 521 from here, that would look like a bullish sign. It would again look like we are getting a fifth wave advance to complete a larger third wave. This would be a buying opportunity. So a move, went the wrong way there. A move above 521 here would leave this as a counter trend pullback off of July's high and would look bullish. If it doesn't, if it trades sideways, if it goes below 460, then it becomes a whole different thing. You'd have to think that the advance off the late 2019 low is actually a completed five-wave advance that is being corrected at that point. So you'd have to look for a larger pullback, at least into this area, and that would be only if Netflix is just correcting this up leg off the 2019 low. If we zoom back out and take a look at the longer-term time frame, you'd have to start worrying about larger time frame pullbacks based on the possibility that you have a large completing five-wave advance. So if this fifth wave advance completed by price moving below 460, then you have to be nervous about the future prospects. You could be looking at a massive counter trend pullback. I'm not saying that's what's happening, but it would be enough that you would have to at least respect the possibility. So if it moves below 460 and this pullback continues to grow, I don't think I'd touch it. I'd want to see how big the pullback is going to get. If it ends up just being a correction of this up leg, finds support in this yellow area, and turns higher, then it could be a buying opportunity. But if it moves below kind of the 370 area, stay the heck away from it. Obviously, that's a long way away from where we're at currently. But if that happens, then you start having to worry about, again, completing this entire five-wave advance and correcting that entire move before the overall uptrend resumes again. So those are the levels that we're looking at. A move above 521, again, looks bullish. A move below 460, you'd have to be concerned. So that's what we're looking at there. Let's go ahead and look at Google for you now, Christopher. Let's go ahead and start with the long-term time frame. This is another one that takes a lot of time to really get a good feel what's going on because it's such a straight line move over time. I mean, basically since 2008, this thing has just been in a huge, impressive advance over that time. It was incepted back in 2004. Trendy up move, doesn't matter how we label it. What really matters is what's happened after this large ABC pullback into the 2008 low. To me, it appears to have been in a very large, not yet done five-wave advance, currently in the third wave of that advance, with that third wave beginning in 2011. So let's just zoom in on this trendy action here to give you a closer look at that, and just to show you some of the more details and how every up leg does look like a trendy move, every pullback looks like a counter trend move, so on and so forth, and just going through every single wiggle and detail of this chart is what led me to this labeling here. I believe we're late in this third wave advance. I think we did a first, a second wave, a third, and a fourth wave was the pullback in 2020. And that puts us in the fifth wave, the final wave of this third wave advance here. And that's what it looks like to me. Let's go ahead and zoom in and look just at the action off that 2020 low here. Here's the next part. I don't see any other way to label this up leg off of the 2020 low except as a completed move. if you're following my videos, you see we're seeing this trend all over the place. The stock market, the different stocks we look at, Tesla, whatever else, we're seeing a lot of stocks that are saying they're in a larger pullback here and now, and this one is super apparent. The pullback that's happened in September is way bigger than anything we've seen since March's low. This up leg counts out as a completed 5-wave move, so we're in a larger pullback. The most bullish scenario would be if this counter trend pullback, is just a correction of this up leg off of March's low. Now, in order for that to be the case, it needs to find support somewhere in this yellow area. If it moves below this area, then you're talking about a much larger high. You're talking about this third wave advance being over, and then you're getting that larger correction of this entire advance off the 2011 high. That's a big deal. Then you would want nothing to do with Google. So I think that this is a very important point right now. With that advance, you want to see what happens with this pullback. Let's take a little closer look at the pullback itself. It's been a very sharp move. I mean, this is only, 3 weeks, and it went from 1720 down to 1400. That's a chunk. I'm talking maybe 20% of the value or somewhere in that area. Currently, it's a 3-wave move to the downside, but this move may not be over. It's kind of traded sideways over the past week. If this goes sideways and heads down again, then this down leg off of September's high becomes a trendy 5-wave move, and that would be scary. That would suggest that we're going to get a much larger pullback before this thing is over. So if that happens, I wouldn't want to touch it. The other possibility is that this is just a 3-wave pullback, and it's going to head higher from here. If a move above 1520 at any point would make this a 3-wave counter trend pullback. Overall, that would be a bullish thing because it would indicate that this is a counter trend move and that the trend is still up, but it wouldn't necessarily mean that the trend is going to resume directly from here. So this is one that I recommend caution. I think you want to be careful with Google. The potential for this pullback to get a lot bigger before it's over definitely exists. And if it is a larger pullback, let's say that this is the start of that 4th wave pullback that we were looking at there, you're talking about a move that goes down to almost 800 up to about 1150. I mean, that's a huge pullback. If you look at the 2nd wave pullback of the same degree, the blue degree, that move took almost 2 years. You know, I'm not saying this will take 2 years, but that potential would exist if you start seeing a deeper breakdown and you start seeing a move below that 1280 area. The door opens wide open for a much larger pullback. So on this guy, I just think you need to be careful. You need to see how this down leg progresses. If it turns into a trendy 5-wave move to the downside, I wouldn't want to buy it. Even if it moves up through that level there, 1520, to make this a counter trend pullback, it would still be possible that you're going to get an even larger counter trend pullback before it's over. So for me, I would need to see a completed counter trend pattern followed by trendy upside action before I'd be interested in buying Google. I don't think we're anywhere close to that. I think right now you need to be careful with Google. So, Christopher, I hope that's helpful. Those are the 3 stocks you asked for. Have a wonderful evening, and we will talk to you again very soon. Take care.